Good morning, everybody. It's Thursday, September 19th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 2 3/4 at 410. November soybeans were up 1.5 at 10.15.5, and December Chicago wheat was down 5 1/4 at 5.70.5. This morning, we had weekly export sales in line with the estimates for corn, 847,400. Soybeans were much better than expected, 1,748,100. Upper end of the range there was looking for 1.6 million. Wheat sales were disappointing, 246,300. The low end of the estimates was looking for around 300. And meal sales were 283,000, which was just above the low end of the ranges. Good morning, guys. Yesterday afternoon, we got a Fed announcement. They cut 50 basis points. In the afternoon interview session, Powell alluded to more cuts coming down the line. And so, it was interesting, outside markets, Dow was all over the place, and it's sharply higher here this morning, up almost 500. So, Dustin, maybe a few thoughts just on all things Fed and grains, and we'll throw it around the room.
Yeah, Dan, thanks. Fed, they chose the path of, steeper cuts. There was definitely a debate about 1.25. And I'd argue that that's definitely an undertone that's friendly for all commodities. I mean, gold hit new all-time highs right after that. Markets are still taking a cue from that, I think. And that's, one area of support, but we still have to consider the fact that we're hearing really good yields in Illinois and in Iowa. So harvest pressure, I think, is still coming, but all the more reason to maybe look at the back end of the market, and you're starting to see D25 corn trade above 450 again. There's definitely a dollar denomination question when, like we talked about yesterday, they're trying to teeter-totter around a soft landing, making sure that, their dual mandate is, is achieved, and that we're not going to take any pain. That's their hope. Well, that ultimately is usually a problem for fiat currencies. So, like we've talked about a lot, the last 30 years, we've been spoiled with a rather stable currency. If we're, thinking about 25 hedging, which is where a lot of our focus has shifted now, we have to be kind of cautious about, if our inputs are not locked yet, how aggressive are we going to get marketing as we start to hit back up into the higher fours here for corn and where we are for beans? And that's not saying that we don't want to hedge. We definitely want to hedge. We just want to be very calculated with how we do it. And there's a long way between black and white, sell or not sell, trying to get protection. And I think that's our focus right now.
Very good. Ben, what's on your mind this morning?
I like what Dustin's saying. I think that we've used the term around the office before that with all the uncertainty that's out there, having blunt force marketing strategies could really come out to bite you in the end. So I think adding a little bit of flexibility and creativity to that makes sense. Looking at markets this morning, we have soybeans that's touching and playing with the 50-day moving average here the last few days, kind of sucking people in above it and then going back below it and trading both sides of it. We saw the same kind of price action in corn. So we'll see if they can get something to stick here. I think the timing of it, when you look at the difficult part is when you look at the timing, the charts look good. They look supportive, but we are about to head into a pretty massive period on the calendar with low river levels and the question of whether or not we can perform the needed logistical services to the agriculture industry to get grain moving. So that's really kind of what's on my mind here over the next 2 to 3 weeks.
Very good. Justin, welcome back. We were talking before the show. We're starting to get deeper and deeper up here in the northern half of Illinois. Guys I've started kind of early this week and they're going pretty strong, but you made a mention that, beans drying down rapidly and we're still seeing pretty significant yields up in this part of the neighborhood here.
Yeah, and we've I was talking to my brother last night. We're getting kind of some of the rougher looking stuff. It's still green, but it's 10% moisture, and I think that seems like I've heard several stories of that. Yields are really, really good. Mid 80s, even some low 90s. Now that area, northern Illinois, has gotten pretty consistent rain. Through it kind of ended dry, but we had pretty timely rains all year. That'll be an interesting question mark to see how that. I think guys are waiting, hoping for a little bit of a moisture, a little bit of rain, add some moisture to the beans. You can only do that for so long. Start worrying about pods splitting open and getting too dry. So I think we're gonna be going pretty heavy on beans. It'll be interesting to see some of these areas that have been dry for 30 days. Do they have enough moisture going into that period to sustain these big yields? I think that'll be important. I do think the bean market has put a little bit of premium in. We've seen managed money clean up a little bit here, both corn and beans. I think looking at South America water deficits, kind of the dry finish we had here, myself included, kind of start second guessing like, what are we overshooting these bean yields? So early stuff's really good. From what I've heard, I haven't heard anything that, if anything, definitely better than I was thinking we would see. So we'll have to really just kind of see if we keep getting the same kind of information back, or if we start, I'm sure we'll get into some areas that are disappointing and all those kinds of things. But if we keep hearing those kind of yields, it'll be probably a tough battle in the short run for beans.
All right, guys. Anything else to add on the grain side here this morning before we move over to Ryland? Dustin, you're shaking your head. Is that good?
Oh no, I think, well, yeah, it's definitely a confusing time going into that gut slot of harvest and what we should be expecting. I mean, we've hit some really low prices, but if I think that the important part is if you're getting your yield discovery is above or below expectations, that probably should impact how you look at marketing, right? If you're falling way below expectations and you've got an 85% policy with these low prices, you might be in a payment. And conversely, if you've been kind of on the verge of profitability and then you're getting the extra yield bump that you weren't expecting, we're having a pretty sizable rally off the low. I mean, above 410 corn and above $10 beans, that's pretty good if you're looking at 10% above normal yield. A lot of that's made up through the yield, and I just think you want to be really on point right now, because this is the early pre-harvest rally that we're seeing, and we still haven't got into that, time where we're looking at lines, and I don't think anyone really wants to get caught holding on to bushels like they did last year. So I think the sales come quicker, and that might impact spreads, it might impact basis and flat price. So I don't know if there will be a rush, but it definitely feels like if you're on the higher end of yields, you might want to get in a little bit early before everybody else starts selling that. Would be my take. Again, keep it measured, go to the matrix and make sure that's the right decision for you, but something to consider.
Yeah, and I think Dustin, that point too is like, if there's going to be a story in beans, my opinion, it's going to be a South American. We're going to have a big bean yield this year. Again, we've talked about this for a long time, whether it's 51 or 55 or some number, it's going to be enough beans and burdensome really in the world picture. So, you obviously been dry in South America, monsoon, we're supposed to get some decent rains end of the month. But if we don't, I think anything that's going to happen is going to be kind of in that, call it March to July timeframe. So if you need cash and you, like your point, your yields are much higher, like you should really consider doing something, go buy some calls or something if you feel like you're going to, worry about missing out on something that might happen in the next 6 months. But,
Yeah, option volatility is probably fairly priced right now, considering how dry it is in Brazil. I mean, if this is the start of a trend and we hit 20% yield cuts in Brazil this year, yeah, we could be at $15 beans by March, and that's always a possibility. Like, but we don't want to operate under that pretense right now. So if you have to sell beans, you have to raise cash, go buy an $11 call for 20 cents or something, just to get you out through that March timeframe, the critical timeframe for, South American weather. So you're still in it and still having your sales on that you need to have.
Well, and if you go back 30, 35 days ago of what people thought their yields were and where prices were, now you've had $1 flat price, even more if you factor in carry, and maybe your yields are coming in 10 bushel higher. That's, $100, $150 an acre to the bottom line that you didn't think was there, maybe 30, 45 days ago. So it's kind of putting all that in perspective. We could have actually a good year.
Right.
So I don't want to give up that part.
Yeah, no doubt. I was just looking here quickly, Justin, you referenced that rains coming in Brazil. They do. I mean, like the next 16 to 20 days are going to tell the story pretty quick. If it does flip. If it doesn't, then you're going to start talking the driest in 30 years, and that whole narrative is gonna catch some fire there. So, yeah, certainly something to keep our eye on. All right, guys, good stuff. Ryland, pretty quiet overall yesterday. Hogs ended up pushing a fresh high late into the session, but outside of that, it seems like we're waiting for cattle on feed tomorrow, and not much else in the way of fresh news.
Yeah, I think just overall the trade seemed a little bit uninspired, but in the hog market, you did make a new high for the move. It just kind of feels like all of a sudden cash was lower, cutouts lower, and so all the fundamentals look like they're turning a little bit, and the market's still kind of ripping and roaring just for the past 3 days. So we'll see if we get some follow through. I think there may be a little bit of optimism just because of the Fed's 50 basis point cut. I think just overall people are going to think that exports are going to start to pick up here if we continue to see that trend hold. So overall, I think it's just more of a wait and see mentality right now, but prices are coming back to the higher end of the range. I mean, it makes a lot of sense, I think, to look at a little bit of extra protection on the hog side of things. As far as cattle goes, yeah, just very uninspired trade there. I think Packers put some feelers out there yesterday at 178. Asking prices are still 184 to 185. So it looks like we're not really seeing them jump too quickly with the report kind of here. I would imagine that things are going to start to pick up today, if not kind of early tomorrow, just before that report. But overall, we're trying to price in the estimates right now with on feed at 100.8, placements at 98.9, and August marketings at 96.6. So I think we're going to try to trade those numbers. Open interest has been increasing. We were up at 1873 in commitment yesterday. So kind of feels like, maybe we're seeing a little bit of hedging, a little bit of cautious optimism from kind of both parties here, but just nobody really wanted to come after it too hard yesterday. So just waiting for some new info to trade here.
Very good. And to reiterate, that cattle on feed will be out 2:00 tomorrow. So it'll be after the close, and then we'll take a look. Ryland will have a write up in his afternoon commentaries, and certainly we'll discuss it Monday there on the War Room. If you like the show as much as we like putting it on, we appreciate everybody that tunes in on a daily basis. Throw us a like or subscribe. Certainly helps us out, keeps you up to speed on everything AgYield, and we'll let you know when the shows are coming live. So throw us a like or subscribe. Doesn't cost you anything to do so, and we certainly appreciate everybody on a daily basis that chimes in and participates with the show. A couple of things to note. Jack will be in tomorrow and Monday. Tomorrow's Fun Fact Friday. Jack will take it over from there. Brian will be traveling a little bit tomorrow, so should be quite interesting. Be sure to tune in for Jack's Fun Fact Friday. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.